Hello, everybody. Professor Rogoff, it's an honor and a pleasure to have you here today, virtually, but still a big honor and pleasure. Let me spend a few words to introduce you and to explain why we are extremely lucky to have you in particular discussing this book, which is couldn't be at most interesting times. While Professor Rogoff is currently a professor at Harvard, is a Boas professor at Harvard. Formerly, he was chief economist at the IMF, and actually he was my direct boss, and I had the pleasure to have him and I saw him great in policy circles. Before that, he was also professor at Wisconsin, and even before he was at the Fed. So he has a great opportunity to be present both in academic circles and in policy circles. Most recently, he has written very successful books, including This Time is Different, 8 Centuries of Financial Folly with Carmen Reinert, and the book Curse of Cash, also a very timely book, very interesting book that I strongly recommend, and a landmark, a very important book for all international economists, Foundation of International Macroeconomics. But now we are today to discuss his last book, which was just translated into Italian, and it's here. The book is called Our Dollar, Your Problem, an Insider's View of 7 Turbulent Decades of Global Financial and the Road Ahead. And we are discussing both the turbulence, but especially the road ahead, because it's not a road. There are many different roads, and we are trying to understand through the book and through you which road we should take or the world could take. Welcome.
Well, thank you so much. I'm sorry I'm not with you in person. There's nothing I love better than to be in Italy at this time of year. And the idea of a festival of economics is rather unique. So, but I'm glad to be here virtually.
Thank you. And I don't know if you can see the complete hall, but it's a pretty large hall. And despite the fact that this is a public holiday in Italy, there are so many people interested and curious to know to learn what is ahead for us. Should we start?
Go for it.
Yes. First question. The title of the book refers to a sentence pronounced in Rome. And actually, the book is it's interesting to present in Italy, this book. And
indeed.
Could you tell us the title in English? Could you tell a little bit the story, why you chose the title and why the sentence was pronounced in Rome, by whom, and in response to what?
Yeah, so the short title of the book is Our Dollar, Your Problem. And it relates to a very important moment in the global financial system. I would say the biggest thing, maybe until Trump's Liberation Day, or maybe similar, the closest analogy. Many people know, but many people don't. After World War II, there was established a fixed exchange rate system where at least the countries of Europe, some of the more developed economies, fixed their exchange rates to the dollar. The dollar, in turn, US could do whatever it wanted, but in principle, if Italy or France or Canada said, here's $1 billion, please give us gold, the US was required to oblige. And the gold price was set at $35 per ounce of gold, which went back to the mid-30s. Private individuals couldn't trade gold, which is part of why not so many people know about this, but governments could. And this provided an anchor and also some reassurance to Europeans who were holding comparable amounts of reserves in those times to what Asian central banks are holding today. As I'm sure many people know, Asian central banks hold trillions and trillions of dollars in their central bank reserves, their sovereign wealth funds, but not literally dollars, their treasury bills, but their dollar US debt. So anyway, things were rolling along. The system worked pretty well. Europe grew back at a phenomenal rate, faster than the United States. But it was precarious. We don't need to go into that this second. It probably wasn't going to last forever because Europe was growing so fast, its needs for dollars was growing. The United States, we're really good at printing dollars. I promise you we're still good at that. But our gold supply wasn't growing at a comparable pace, and it wasn't going to go on forever. But many people thought it would last much longer. Then Nixon, rather surprisingly, decided, no, we're not going to trade dollars for gold anymore. I mean, there's some technicalities around that. I don't want to get into it. So needless to say, everyone around the world, but particularly in Europe, were shocked. And Nixon sent his Treasury Secretary, who's John Connally, a very colorful Texan. Just to mention, he had been in John F. Kennedy's car the day he was shot in Texas. He himself was badly injured, but had recovered a decade later. So he sent Connally to Texas to meet with his counterparts from all over the world, but especially European finance ministers and central bankers. And of course, they said, wait a second. We can't trade this for gold. We have all these dollars. What are we supposed to do? And what if you inflate the value down? We're really worried about that. And Connally said, well, it's our dollar. It's your problem. I'm slightly paraphrasing. What speaks to me about that, and I want to say the book actually was released in the US about the same time as in Italy. It was just been released. But I had finished it before I knew who would be president. I had no idea that Donald Trump would be president. What speaks to me about the title is the arrogance of it. I'm an American. I'm very proud to be an American, but I don't like that edge of arrogance. And when I traveled in Europe as a teenager playing professional chess, I sort of got a flavor of how people loved America, but they hated it too. So I don't like that. Also, it captured a certain irony. When Nixon abandoned the gold constraint, he didn't really have a plan for how to stabilize inflation. I don't think he understood it. I don't think the Federal Reserve completely understood it back then. So it was also our problem. If I was writing it today, I'm sort of half tempted to call the book Our Donald, Your Problem, but maybe that's for a follow-up.
Thank you very much. And yeah, would be an interesting title. And I forgot to tell that Ken is actually was a professional grandmaster of chess, international grandmaster of chess, before becoming a worldwide famous economist. So it's unique in this case. And I like the book also because he brings a lot of concepts from the chess, his chess life, and I think it's a fantastic book exactly for this, mixing economics, serious economics, but with insights from chess. I found the title excellent, but I don't think that it makes justice of the title of the book. The book is much more of a history of the dollar. It's a history of macroeconomic developments in the last 70 years, and with reference to the dollar, but it's much broader. And one thing is a common thread to the book. I would say the pigs don't fly, or this time is different. There are two kinds of macroeconomists. Some macroeconomists that extrapolate the last tendency and they say the world is forever different. Now we are different in we're living in a different world. Other macroeconomists keep in mind that the world, there is a law of gravity. At a certain point, you have to land somewhere. And Ken probably is the head of this second camp. And I give you 5 examples from the book which refer to titles in the book, to chapters in the book. First, there is a long discussion why in the 60s people thought that Soviet Union would overtake United States, and why it was wrong. And this go back to your to a chapter in the book in your undergraduate. And second is Japan would overtake the United States, and goes back to an experience that Ken had at the time visiting the Bank of Japan. Third, recently, why China would overtake the United States. Finally, why public debt does not matter. There was a debate in the States, which is very important, on the level of deficit, debt, and I think that Ken was on the right side, and he will explain why. And fifth is the fact that real interest rates will not be forever so low as they were in recent years. So maybe you can, it's a long question, you can spend a few minutes for each puzzle, just, not puzzle, to show why solid macroeconomics is more important than the latest version, starting with the Soviet Union in the 60s.
Yeah, let me start with the broader theme you have, which is if you want a lot of attention in the press, the most reliable way is to look at some trend which has lasted for a year or two and give a reason why it's going to last forever. And they love that. They don't want to hear that something's going to happen in 5 years. I tell a scene in the book about speaking directly after the Fed chair, Alan Greenspan, at the peak of his fame, when he was the maestro. No one dared disagree with him. And he was giving a talk about why the US borrowing, US current account deficit, which is so wonderful. And I spoke right after him and disagreed. There's a lot of irony and sarcasm in the discussion. You can see it because, of course, the whole room had disappeared after Greenspan stopped speaking. But I talk about a reporter who stayed on, and he said, "Oh, you're worried about something. What is it?" And I said, gave some reasons that I don't think this was 2003, late 2003. I didn't see yet the financial crisis coming the way it did, but it seemed like something was wrong. So I explained to the reporter that I thought this was one of a few signals why something was wrong. And the reporter said, "Well, wait a second. Is there going to be a problem in the next few weeks?" I said, "Well, no, that's not likely." And then he just walked away. And, you know, that's very much how our information age has always worked. So let me talk about the Soviet Union first. That's really hard for people who are even, I'm 72 years old. I have seen, been 5 decades really as an economist and lived through these things. And even earlier as a chess player when I lived in the former Soviet bloc. Nobody knew that Russia was going to fall on its face. I wouldn't say anyone thought Russia was going to surpass the United States, but nobody had an idea that it would collapse the way it did. And when I'm saying nobody, Paul Samuelson, one of the couple greatest economists of the 20th century, his textbook taught how we would catch up. Walter Rostow, who was a giant in development economics, very influential. Nobody, he thought Russia would catch up. Doesn't mean the dollar would necessarily be overtaken by the ruble, but the dollar's world would be much smaller, and possibly Russia would have more influence. The great historian Angus Maddison, whose work we use all the time, if you've ever seen all the data on purchasing power parity incomes, it's a way to compare countries. Angus Maddison was really the one who put together the longest and best data set on this. He was a little more skeptical, but he said Russia's growing faster than the US. It's true. And it was, in his estimation, it was already half the size of the US. Let's just keep that in perspective. This is the former Soviet Union. Today, it's less than a tenth, but it was half, and he thought it would grow quite a bit more. And there was a very widespread opinion. And so I think had things gone a little differently, and I talk about it, they could have done better. Russia could have gone more the way of China. Things didn't have to be the way they were. So another example is Japan. And Antonio, I don't think I necessarily got this one so correct. This is one where I really didn't know what was going on. Japan, again, most younger people don't realize this, was crushing the United States. Japan wasn't just catching up to the United States. Japan had in many ways surpassed the United States in the mid to late 80s. It had, at market prices, higher per capita income than the United States, and obviously way higher than any European country. If you use the Angus-Madison measure that I just mentioned, it was less, it was 80, 85%, but it's still above all the European countries. On top of that, its stock market was worth more than the US stock market, combining the US stock markets. Its real estate was worth much more than real estate in the United States, even though it's the size of California. You say, that's ridiculous. Japan's just an island. Japan is, small. It had half the population. Well, look at England, ruled the world with a population a fraction the size of France's. I mean, there's nothing shocking. And the whole story of how Japan fell by the wayside, I think is a really important one, not just for Japan, not just for the United States, but as a lesson to China and other countries. I think Japan made a mistake. Of course they made mistakes, but they made a big mistake getting bullied the way they did by the United States. As for China, that I actually have 6 chapters in the book about that, and that's very relevant still today. I had visited China many times, starting when I was at the IMF, and I have a lot to say about it. I won't go into detail, but I was always skeptical about the imbalances in China, and particularly the real estate-led growth. There's a lot, I've done research on this the last 6 or 7 years, and my research was able to pinpoint something that I'd always thought, which was that China was just way overbuilt and was running into diminishing returns. And I think, interestingly, the book's about the dollar, and the fact that China decided that they would peg their exchange rate to the dollar was a huge boost for the dollar. Because remember, Europe isn't using the dollar. If you go right after World War II, the 50s and 60s, the dollar was mostly on top of Europe. The rest of the world wasn't really integrated into the global financial system. But China's choice and China's spectacular growth played a big role. One of the reasons I see the dollar's privilege eroding for many years now is that China is breaking away. I'm not sure if I should talk continuously without being prompted, because we still have debt and real interest rates are big topics.
Yeah.
Do you want to expand on your questions? I just feel like I don't want to drone on in a monotone indefinitely without being broken up by your lively questioning.
One thing, let me break with this. I think you got also something wrong, and I admire your willingness and ability to admit mistake. If we don't admit mistake, we cannot make progress. And you were very skeptical about the creation of the euro. And
Indeed.
As you were not alone. Almost all US-based economists were very skeptical about the euro. Why you were skeptical? Why you turned out to be wrong, or the judge is still waiting?
I indeed pick a couple things. I think it's important to say things where I was wrong. I talk about sometimes you do want to have fixed exchange rates, that my thinking evolved. I talk about this issue with the United States bullying Japan, where I didn't blame the US enough for that. And in the process of thinking about over the years, I changed. And also on Europe, I think it's very important for economists. You're always going to get some things wrong. And I think the whole bravado that some economists have, I think most notably Paul Krugman, that they're sort of almost always right. It's just, okay, it gives you a certain fan group, but I think it's a mistake. Larry Kotlikoff has a famous quote, I wish I could be as sure about anything as Paul Krugman is about everything. And I tried not to, capture that in my book. Paul is amazing and has many brilliant ideas, but it doesn't mean he's always right. He's been very, very wrong about real interest rates, for example. But on the euro, it just looked not doable to me. I just didn't see. I watched the blow up of the euro in the early 90s, and I just didn't have the imagination to think that Europe could have its capital markets open up, everything stabilize, and gradually come together. I make an analogy in the book to, it's very hard to dock two spaceships. You're going at a very high speed. If you get it slightly wrong, they blow up. And the euro was docking 7 or 8 spaceships at the same time. And I think it's an incredible technical achievement. I think really, if we point to the great technical achievements in modern macroeconomics, the euro is simply extraordinary. Usually when 8 countries have the same currency, it's because one of them conquered the other 7 and they all adopt the currency. It's really very unusual. Yeah, I understand there are precursors, there are other examples, but it's really something unique. Now, that said, there's the question of how well the euros worked, which is another story. I argue in the book that, in fact, had Europe just kept its free trade and gone with central bank independence, which you may ask me about later, you would have got low inflation, things would have worked pretty well, you wouldn't have the euro crisis. If I were advising Europe 30 years ago, I'd still say that was a better idea, but the jury is out. I mean, there's certainly many of my European colleagues, and I enormously respect them, still think it's the best thing ever. It's the only way to counter the dollar. And that may prove true, but it hasn't yet.
Thank you. Let's move to the present and the near future, because I think that the book provides a lot of good insights of what is happening. By providing a list of things that strengthen the position of the dollar as an international currency, it also shows what are the weaknesses if you demolish the value pillar. So and in this, I would like to quote actually the late Professor Stan Fisher, who just passed away 2 days ago, who said in 2017, I had a picture of the world economy in which the US was an anchor, not a source of volatility. And now we are in this very incredible world where the anchor is moving and many of the pillars that underpin the robustness of the dollar, including central bank independence, fiscal probity, and rule of law, free trade, are a little bit under attack. Would you like to comment on this? And after we open question to the public, because I think this is a big question.
Well, first, thank you for mentioning Stan Fisher. He was on my thesis committee and served as a mentor to me throughout my life, and just an extraordinary man. To show how liked he was, he, of course, was loved by his graduate students. He wrote a textbook, undergraduate text with Rudy Dornbush that many of us used, that was the first to really introduce supply-side economics into a Keynesian framework. He had a graduate text with Olivier Blanchard that was just marvelous. But also he held four major policy positions. He was chief economist at the World Bank. He was first deputy managing director, which is a long phrase for number 2 at the International Monetary Fund. He was head of the Bank of Israel, and he was vice chair #2 at the Federal Reserve. And he served with incredible distinction in all of these. So indeed, an extraordinary man. In my book, I argue that really since Trump's first term, and I don't know that it was at all because of Trump, and maybe dating a little before that, the dollar has been fraying at the edges. I don't think people properly appreciated that. I have a 2019 QJE paper, Quarterly Journal of Economics, with Carmen Reinhardt and Ethan Olszewski that sort of shows why that might be happening. At least it does when we update the paper, as I show some evidence in my book. And, basically the dollar had colonized the whole world, and there are a lot of things other countries don't like about us. So nobody likes the information gathering we get to have by having such visibility of all financial transactions that go through the dollar. Another famous central banker of a top European central bank came to my office once, I can't say more about who it was, and complained that he was not Christine Lagarde, that he had just bought something for his wife using a Visa card, but not in the United States. And it really bothered him that he knew Donald Trump could see it. And this is someone who really knew how the system works. The Europeans didn't like it, and you can imagine how the Chinese feel about it. And then the sanctions that we put on Russia after the full-scale invasion of Ukraine, we've made it very difficult for them to trade, not impossible, but difficult. We have basically, taken away $300 to $350 billion worth of reserves. We say it's not a default, but of course it is. And so all of these things have caused a retreat, but Trump has just brought whole new dimensions to this. His tariff war, just for 100 reasons, is not good for the dollar brand. Making the economy more closed is not good when you're trying to get everybody to buy your assets. Making people doubt the rule of law is not good when foreign investors want to believe that they invest money in the United States or hold treasury bills, they won't be taxed. And in fact, Trump has, his latest tax bill has a tax on foreign investors. It's incredible. There's a tax on any green card holder, temporary work permit in the United States, sending money back to their home countries. There's a plan on the table from his head of Council of Economic Advisors to partially default on all debt to foreign institutions, say the $2 trillion that the Central Bank of China holds, the People's Bank of China. And even if only some of this happens, it has been unnerving. And I think there are a lot of signs that financial markets are quite concerned about this. So I can go on. And you can say, well, he'll walk it back. He doesn't really mean it. If you're the person in charge of managing China's $2 trillion in treasury debt, and believe me, that brings a lot of benefits to the United States in terms of lower interest rates. And you don't do anything. And a year or two from now, President Trump does something radical. And why wouldn't he? He's clearly prone to that. I wouldn't, want to have your future. I mean, I think not just China, everywhere is looking at that. So I think we live in a moment where I think an inevitable move towards the dollar, not disappearing, but being taken down several notches. The renminbi eventually taking up more space, at least in East Asia, Africa, Latin America. And Euro has a real opportunity to do things here. A lot of top European policymakers have talked about this. Let me just say one last thing about that. Some people in Europe say to me, that's absurd. look at all the problems Europe has. How can Europe ever do better? How can the euro ever do better? And I said, there's some very good Italian basketball players. In basketball, if your team doesn't improve, but the other team's best player or best two players have injuries, you're going to do better. And I think that's the position that the euro is in, even if it doesn't improve. And then our budget deficit is completely unsustainable, which brings us back to, I did want to mention the real interest rate. 10 years ago, I think I was almost all alone among academic economists who said, we will not have interest rates just going down and down. Larry Summers had secular stagnation. Olivier Blanchard had a brilliant, but I think fundamentally overstated thesis in his 2019 American Economic Association address, saying we just shouldn't be worrying about debt. There was something called modern monetary theory, which is not modern, not monetary, not a theory, but very popular in the United States. It was not so far away from these ideas, all just suggesting interest rates are so low, who cares? What's wrong about that is debt doesn't go away and interest rates can change. And that's been happening, of course, in Europe, but it's been happening very much in the United States. And suddenly it's abundantly clear that debt is a constraint on our growth. It is a problem. Although I'm saying it's abundantly clear to more economists, it's not quite abundantly clear in Washington. I think we won't get a reaction until there's a crisis.
Thank you. Thank you a lot. Let me go back. How far are we from a moment where the dollar is dethroned from the status of international reserve currency? Are you, what would you say in 3-5 years or yeah?
No, I'm not, my book doesn't say that at all. It says that its position, its market share is going to sharply diminish. And the renminbi mostly, but also the euro, if it tries, will get more of it. And that matters because it's not just that you're first, but when you're way on top, obviously it helps your interest rates much more. But also, remember, I'm sure you do, back just over 10 years ago, the US said, we're going to put sanctions on Iran. And Europe didn't agree. And the United States said, well, fine, you can't use our banks. And Europe had to cave because the US banking system is so central. As other rails, as other mechanisms for doing international transactions, some of them will include digital currencies, evolve, that power is going to weaken. Oh, and I should have mentioned digital currencies because I don't see cryptocurrencies as ever making it big in the legal economy, though I'm going to be a little sarcastic in saying anything is possible under Donald Trump, at least for a while. I don't think long run that's such a terrible idea. I don't think it's going to happen. But in the underground economy, which I have a paper in the Journal of European Economics about this quite recently, is a very big part of the global economy, maybe 20%. Cryptocurrency is big there, and it's already taking a big market share from the dollar.
Well, do you see anything positive on the policies announced by the administration?
There's actually a lot. So I teach at Harvard, guilty as charged, but I actually don't have what we Americans call Trump derangement syndrome. I think he's right about some things. I mean, obviously, he's a very volatile and often unpleasant person, but he's absolutely right about pulling back on regulations. You have a big problem with that in Europe. You may not be aware of this, but a book sweeping democratic think tanks and circles right now is by Ezra Klein and Derek Thompson, called Abundance, which I'm just going to give my interpretation, just basically says progressives, liberals need to think about trade-offs. If you want to protect some small snailfish in Central California, but if the implications that Los Angeles will burn down, it's a bad idea. When it comes to debt, and actually this is a very important point, I found 10 years ago, if you say that there's any problem with having high debt, you're accused of being favoring austerity. You favor austerity. No, that's not what it says. It says, of course, stimulus is good. You want to do lots of stimulus. It's great, but there's a cost. You have to have the benefits and the cost, and you have to weigh those things. And I think, you know, this whole notion that they're trade-offs is something that has been an awakening now, at least in the Democratic Party in the US, in trying to rethink policy. And debt and deficits is a very important piece of that. That yes, deficits are good, but our debt is very high, and that's not good.
Thank you. Given that we are in Europe, if you were Christine Lagarde or Draghi or Philip Lane at the Central Bank of Europe, or in general, European Commission, what would you do in response to Trump policy to strengthen the euro and to, in response to what is going on?
Well, first of all, I want to say, I think this is a very propitious moment for Europe. Europe has a real opportunity here because the US is not going to be as strong as it was. Yes, temporarily it may grow, but for example, Trump's crypto deregulation will very, very likely lead to a big financial crisis in crypto that will spill over into the general economy before his term is up. I see many problems. China officially is growing again. Don't believe it. I think their economy is in trouble. And Europe has a lot of potential, if nothing else, because it has room to catch up. Also, I speak in the book quite a bit about how military power is actually quite important for currency dominance. I don't want to get off into the discussion here, but Europe has been weak in that, and if Europe strengthens. As for advice for Europe, I mean, the Draghi report is fantastic. That's just a beautiful piece of work, and maybe some of the people in the audience even worked on that. There are a few points I disagree. I mean, for example, he forms the conclusion that if Europe just starts spending 2% of GDP on defense, everything will be fine. You'll be speaking Russian if you do that. I mean, I think that you need to expand spending on defense more. It's not just Russia, it's Iran. Iran's about to have a nuclear bomb. I think Europe really, really needs to get its act together. And there will be benefits, spin-off in terms of technology, in terms of strengthening the euro. But overall, I mean, the Draghi report's really, you know, just a wonderful piece of work. And it's hard for me to make suggestions that significantly improve on it.
Thank you a lot. I am opening to the audience. If you have questions for Professor Rogoff, it's a unique opportunity. He has been very, I think his book is fantastic because it puts together solid macroeconomic analysis together with real policy experience and a lot of interesting anecdotes which make the reading fluent on a difficult subject, and also from his experience as a chess player in the 80s, I think, in the 70s, to his...
late 60s and early 70s.
Okay, to his, when he met also Bobby Fischer, actually, and to his wife, who was a producer in Moscow, of a children's show, which is Sesame Street, and the various things. And what I find fascinating is how, from his personal experience, he draws a lot of general lessons. They're not just anecdotes for the, but it's just...
I'll just interrupt to say, I had some things I really wanted to say in the book about real interest rates, the dollar, the evolution of international economics. But I know that if you don't write it in a way that people enjoy reading it, you're just speaking to the wind. No one's going to listen. So I did work very hard to think of, you know, what things motivated me, you know, trying to think of things about my professional experiences, my life, trying to draw these insights together to try to make it, you know, more personal, more organic. although, of course, some of the subject material is challenging. That's part of why we make mistakes all the time.
So unless you are a graduate student in macroeconomics, I wouldn't recommend a foundation of international macroeconomics, just as a night reading. That is beyond, yes, I think you really need.
But I hope this one could be.
But this actually has the same concepts, but in a way which is much more approachable and interesting and with real life, but with solid, which I find very difficult sometimes because it's difficult to. But are there questions on particular topics? Yes, a question over there. Just a second, we are fixing the audio. I see. Yeah.
Sì, professore, buonasera.
Good afternoon. So personally, I don't believe that the power of dollar will actually decrease in just a few years, especially under the Trump administration, because I believe that the Trump administration is just a temporary transitional moment in the history of the US. Maybe I might be wrong, but what I have seen, considering the fact that most of the world currencies are denominated in dollars as a reserve, so I don't really think that actually dollars might be replaced as a currency. So I often hear that in the BRICS countries there is the intention to trade goods by using their own currencies. But again, I believe that it's quite difficult to do it, especially if we consider the Chinese currency that is depreciated by the Chinese government itself in order to make it more competitive, to make their goods more competitive. So I don't really think that it could become an alternative currency. So my question is the following, Professor. So if the dollar is actually not replaced as a fundamental currency, but just in case it happened, do you believe that we might go towards what Keynes stated in Bretton Woods, that's a form and core? So do you think that could be the case?
Yeah, well, first I welcome your question in the sense that what's the way to have a really important piece of academic work is when you state something that everyone thinks is wrong, and then you're later proven right. And it's very important to have people say you're absolutely wrong. So thank you for the question. Really, the dollar's been in decline for quite some time. If you look at a number of measures, reserve holdings is sort of a simple one, where it's fallen from 80% to below 60%. But also, the really big break has been China, where China, they're not just talking about pricing oil and renminbi. They are building sophisticated financial networks, which are going to be used. They're not going to be used in Milan, maybe, but they're going to be used in certainly in East Asia. They're going to be used with Russia. They're going to be used with African countries, with Latin American countries. China's the biggest trading partner. Sure, in an efficient world, we'd have only one currency, but there are very, very strong reasons to break away. So the dollar, when I talk about the dollar, I'm never talking about the dollar being replaced as the reserve currency. I'm talking about its power being diminished. And I think that's already upon us, and Trump will accelerate it. Trump, a transition? Oh, you're dreaming. I mean, I wish I could be so sure about that. I think the United States elected him. I have no confidence that, if you're, say, 30 years old now, I have no confidence that he'll be the worst US president you're going to see. There's populist political movements. It has to do with social media, siloing of what people look at. So I think this whole business of the US retreating into itself is something that's going to continue. And just by any economic model, that's going to reduce the power of the dollar. Just the tariffs reduce the dollar to the power. And if you think the tariffs are going away when, say, a Democrat comes into office. This is a very popular policy with Democrats. And Biden didn't get rid of anything practically that Trump did, and he added more buy in America, more restrictions. So I'm afraid this is a trend that's going to last for a while, at least the next decade or two.
Thank you. Other question? I have a question, actually. You argue that the role of the dollar is going to decline, but not to will remain a super important reserve currency. What are the costs of having a multipolar world from a currency point of view? In the sense, we always had, and your book has at the beginning a history from the Dutch florin to the British guild, as a history of 5 centuries of, there was always a dominant currency somewhat, except a few periods. But what are the costs in a modern world where you have a lot of trade, a lot of integration, financial and trade integration, to have many dominant currencies?
So first of all, historically, there have been many periods where there have been multiple currencies. Usually during the transition, there's a period of 20, 40 years where there are multiple currencies. The Spanish pieces of 8, their silver coins, they continue to be very, very influential well into the 1800s, even though the Dutch florin and then the British pound had taken over. And of course, back then, the world was much less integrated than it is today. So if you go back to 2005, 20 years ago, I think almost everybody thought we were headed towards a more tripolar system. Cryptocurrencies hadn't come around yet, but clearly the euro was going to be more than just a regional currency. And my personal opinion is that if France had not insisted on inviting Greece prematurely into the euro crisis would not have been nearly as bad as it was. And the euro's international footprint would it's already big, but would be much larger than it is. And what the Chinese did was against all the advice of the technocrats. And I think if you look, the technocrats were all telling the Chinese leadership, and I talk about it in the book, back then, that don't marry yourself so closely to the dollar. China's a big economy. It shouldn't be doing that for the same reasons Europe shouldn't. And I think it led to tremendous imbalances in the Chinese economy that may take a decade to sort out. But people thought we were going towards a system with the dollar first, but the other currency is significant. And I think that's probably the best way to think about where we're headed now, to something more like that. It's not stable. I think in the long run, and now we're talking 50 years, 75 years, somebody's going to emerge first. Maybe it'll be the dollar again. Maybe the US will pull itself together. Maybe it'll be the RMB. I don't know. But yeah, of course, it's more unstable. But on the other hand, exchange rate flexibility works pretty well. I think the idea that you have to have fixed exchange rates to have stable inflation is something, and again, this is a lot about this in the book. Some people used to think that. In fact, the founders of the euro thought that, I think mistakenly. I think things can work pretty well in such a system. And they're just very powerful political economy forces pushing us in that direction.
Thank you. I have another question. In the book, you stress a lot the complementarity between geopolitical, military supremacy and dominance of the currency dollar. And could you explain a little bit, and I think it's very interesting, but it's beside the economics, could you tell us a little bit the nexus between the two concepts, why it's so important?
Well, you must be aware that there's a new field, geoeconomics, which is just developing exactly about these ideas, that things are more connected than you think. I have a 19 1989 paper with Jeremy Bulow in the American Economic Review that has some flavor of this as an early example. Okay, so I think a lot of people dismiss military power as being important about the dollar, or the dollar as being important about the US's military power. And they couldn't be more wrong. So there are a number of reasons military power is an essential element of being a truly global currency, and something where the euro, if it becomes more of a geopolitical power, will benefit. Okay, the obvious reason is it's harder to invade you. You can settle disputes more easily, but that's obvious. More subtle is that being the military power gives you a lot of leverage in making the rules for the global financial system. Now, with Donald Trump, he just wears his feelings on his sleeve. It's an expression we have. He says whatever's on his mind. And he says this point very, very clearly, if you don't hold dollar reserves, we're not going to protect you. Well, believe me, earlier presidents, although they weren't as crude as Donald Trump in public, were saying very much the same thing. I'm thinking of Lyndon Johnson in the 1960s, Richard Nixon, the late 60s and 70s, Ronald Reagan, even George Bush. These guys were tough. And the implication that, yeah, we'll let you help make the rules, but you better do what we want, has always been there. The size of the US matters, the importance of the dollars matters, but that military dominance also matters. It helps set the rules, and it's part of why so much of the global financial system is basically governed by the United States. And that's something that countries like China and many Europeans, they hate that much more than the dollar pricing or the dollar assets. So that's where military power is important for being a dominant currency. And obviously being a dominant currency gives you an ability to raise money quickly that's very helpful. Of course, you can have a good debt situation. Germany has been able to up its debt to GDP projected from 60 to 80%. Its interest rate has gone up. I'd like to note that by maybe 0.5%, but it's able to do that without much stress. I don't think that would be the case for Italy, which is under strain in these dimensions. But if Italy, somehow the euro was the dominant currency, Italy could benefit from that.
Thank you. Going back to chess, the famous chess player Aaron Nimzovich said the threat is stronger than the execution. Do you think that the current administration took inspiration from Nimzovich when they propose, they talk about a Mar-a-Lago accord where they would threat countries and in exchange of things or not? It's a stretch. It's a big stretch. I see you.
Yeah, I mean, I would have, so the threat is stronger than the execution, basically captures that you want to retain some flexibility in your position. And once you make a commitment, you may accomplish something concrete, but lose opportunities in other areas. You're giving away your hand, so to speak. The Trump administration just seems to think that the threat should be executed. Let's just do it and then discuss it. Let's not negotiate. Let's just do something. I use that expression in the book actually to refer to central bank digital currencies, where the Fed is not working on it. The European Central Bank is working hard on it, as are the UK Central Bank, the Canadian Central Bank, the Singapore Central Bank, and many others. The US is not. In fact, after I wrote the book and said that, Trump has at least temporarily prohibited the Federal Reserve from working on a central bank digital currency. But why I said that was because if you invest a lot in a central bank digital currency and then suddenly the dollar weighs in with one, you're going to lose right now. And so by sort of holding back, maybe if the United States came out with the central bank digital currency, we'd blow it. We wouldn't design it correctly. We wait and see how others do it. But I think in terms of the Trump administration, boy, if I were to make a comparison to a chess player, and I don't know how many of your audience play chess, but we have this phrase coffee house player, which is actually not necessarily derogatory. A coffee house player is someone you would meet in a coffee house or in a park who's pretty good. They don't know a lot of theory or book, but they have good street smarts, so to speak, about chess. They tend to be very aggressive, and they're very effective against weak players. They can beat up on weak players with this aggression. But against strong players who know how to counterpunch and defend, they get crushed. And that's how, so far, it looks like Trump is as a negotiator, as a chess player. I don't know what he's gotten out of Vladimir Putin. I don't see it. Maybe the attack that Ukraine just executed will make a big difference. Iran seems to be on the way to building a bomb. China didn't seem to give in a thing. I can go on and on. So for chess analogies, that's for now what I find better. I hope I prove wrong, and I'm an American. I would rather Trump did well than failed. But right now, the ratio of bluster to execution seems very high. He's able to beat up on people who can't punch back, but larger countries that can, and I include Europe, can stand up to him.
Thank you. We are close to the end. I was asked to be very punctual. There is space for one question. Yes, over there. And also, yeah, short, so maybe there is another question.
Thank you, Professor Rogoff, for sharing your thoughts with us. I have a personal question for you. I would like to ask whether you feel completely safe to openly criticize the White House and their current policies, because we read a lot about their hard lines against universities and Colombia in particular. Thank you.
Well, to be honest, for many years, I haven't felt completely safe to say anything positive about anything Trump is doing. I do think he's been right about some things in his own crude way, but we live in a world, have lived in a world of this progressive orthodoxy where I think there's a revolution going on now. And I particularly would point to, again, to Ezra Klein's Abundance book, where he's saying, some of the things the conservatives were saying were right. I actually regard myself as a centrist, not a conservative. It is true, I criticized Trump this morning on CNN and have a slew of angry, really violent voice messages on my Harvard email, bordering on death threats. So no, it's not pleasant, but I think it's important that even people who wish he would do well tell him when he's screwing up.
We saw on your background you have a nice book called Puppeting Moscow, and you wouldn't put something similar in Washington.
The Sesame Street, that's a book about the making of Sesame Street that my wife wrote. That's, by the way, a huge success, on its way to being a movie. I will be a minor character in it. But one of the lessons Sesame Street teaches us is about the importance of soft power, how, gentle persuasion is often more effective than crudeness. And that's a lesson that I wish Washington would learn.
Thank you a lot. I would thank you. Please. It was an excellent.
Thank you. Thank you to everyone for having me.
We really enjoy it, and we appreciate your time and your frankness and your ability to discuss difficult issues in a very nice way.
Thank you, and I'll say goodbye here.
Thank you. One thing I should remember. Tonight, this evening, at 6 o'clock at Teatro Carignano, there is a closing event for the festival.
So, tonight, 6 p.m., Teatro Carignano, we have a closing event of our festival. Thank you, everyone, and goodbye.